Hey, Steve, Andy, what's up?
Hello, Scott. Hey, Andy.
Hey guys, hello everybody out there. Thank you for joining us today.
Yeah, and I'm back, by the way. Thanks, Andy, last week for covering for me on that trade of the week that never fired, by the way. Well, did technically this week, but after a big mess, but we'll leave that be. So yeah, I'm back in the saddle for the Tuesday trade of the week webinar, and we got some good stuff for you today. So let's just get right into it. And the old disclaimer, we are not registered investment advisors. We're not brokers. We're not allowed to give official financial advice. So whatever you see or hear today is just our opinions, and it's not to be construed as financial advice. We're just a software company. A reminder, hey, Barry's back, by the way. If you're not in Barry's room, it's a great way to learn the product. He's back from a long vacation in Iceland. I think we need to find out if he did try the fermented shark. We forgot to ask him that today, Andy.
That's right, man.
Yeah.
We gotta ask him that, yeah.
But nonetheless, he's back, and he runs a great live trading room, as he likes to call it, and it's free, as we like to report. Free is a great price, and he gives a lot of other great trading rooms and chat rooms out there a pretty good run for their money, those that charge, and he doesn't. So great way to learn the product, great way to learn the market. A handful of really good traders in there, especially Real, who handle's name is Real, covered for Barry for a few days and does a great job. I think Real is a closet moderator. He wants his own room, so he does a great job and takes it seriously when Barry's gone, but Barry is back. And so my point is, it's a great way to not pay any money, to come in and see the product in motion, see how people use it in live atmosphere. You can even interact with Barry if you like. And then we have the afternoon webinars as well, including today. Yesterday I helped Jamie out. Tomorrow is a half market day, so don't come around tomorrow looking for webinars. The markets are closed and people are heading out doing other things. Thursdays, the markets are closed, but we also normally have a webinar on Thursday as well when Andy reports back as to what was seen and observed during the day. And then Friday support session is really important that people recognize that we have this available. Once a week for 3 hours, we make ourselves available, the four of us. And a lot of people use this as an opportunity to come in and say, I need help trying to find a scan with 5 consecutive candles on a bar reversal, what have you. But there's a lot of people that learn just by sitting back and watching other people ask questions. But it's a great Friday way to round out the week. But just a reminder that it's available for anybody to come in and let us demonstrate how to use the product and show you if it's possible to do a lot of the things that it can do. And then beyond that, down at the bottom, Trade Ideas University has its own slide here. Just a reminder, it is also a live event, Monday through Thursday. It's a recurring class, starts on the easy stuff on Mondays and finishes on the harder stuff on Thursdays. Also a 4-part series video recording of the event for those that want it. You can request it. But again, it's not a evergreen webinar with chat typing. No, we're there talking just like we're doing right now. So you have the ability to ask questions and get some examples and demonstrations as we share our desktop like we're doing today. So all those entry slides aside, we'll get going here. The theme of the week, as usual, until further notice. I don't know if it'll ever change, but man and machine together. Our program, our platform is 14 years old, and it's a great complement to the human. And it's exactly what data, AI, and software is going to continue to do for us going forward, whether we're making our own scans in the market using this powerful scanning technology and taking it one step further with Brokerage Plus and enabling those scans to be auto trade, or sitting back and watching what the AI does and watching and learning and hopefully profiting from what the AI does. There's a few decision processes in there as well, but that's the whole point. The AI and the technology curates all of the giant data fire hose that's coming at us in real time and breaks it down to where the human can make much better discretionary decisions on the fly. So it's a symbiotic relationship that we have going forward with our brave new world future, man and machine combined, human and machine. So that said, here's our agenda. Got the date correct, the year correct. Market recap, we'll talk about the incredible bull market. Andy will have some observations on the AI performance and activity, kind of on the light side today. We'll talk about the trade of the week. Again, the theme probably today you're going to hear a lot about is the mining stocks. They're on a tear. It's unbelievable. I think, I'll come back to it, but Newmont Mining is up 28% since we called it out. You're 24 or 28%. I think it's 24% since we called it out as a trade of the week over a month ago. And the stuff that just keeps coming through our scans continues to point back towards the strength we're seeing in the overall sector of the gold miners. So we'll talk more about that. So the trade of the week, KL was a gold mining stock. We'll break it down when we get to it. Brokerage Plus, for those who are not aware, I dropped in a short link in the chat section, but for those that will maybe want to brush up on the subscription options we have going, there's some new features that were added, and especially for those that are on the standard subscription. If you have an interactive brokerage account, or maybe you're thinking about opening an interactive brokerage account, and we got some good news for you. So click on that link I dropped in there, and notice some of the new descriptions that are now included as it relates to Brokerage Plus and our different subscription plans. So I'm going to do a little demonstration on why there is some value there for those that would like something like that. And we'll demonstrate that as well. I switched webinars last week for Andy, so I was in there on Thursday, and I know we have a lot of the recurring people in this webinar as well. So we'll go over some of the alerts that I set for the crowd in Andy's webinar last Thursday after 3 days of market saturation. We'll check in on those alerts and see how well they did. I know they did pretty good, so we'll be happy to look at that. And then we'll continue that same theme and create some more fresh new alerts that might start triggering tomorrow, kind of based off the same scans that we used last Thursday. We'll always want to continue to keep using what is working. Don't want to deviate until things stop working, then it's time to deviate. So getting started here, I was noticing Tesla was up pretty big after hours. Yeah, somebody's talking about EGO. That's a gold mining stock, and look at that. We will talk, look at that, just about as beautiful as it gets right there in terms of what the footprints in the sand tell us. Nice consolidation at our fast line, the bird in the hand setup that I talk about, and whew, that little birdie flew. Didn't he? All right, so back to the SPY, now that I've got my pen fired up here. Gosh, not Spotify, SPY, SPY. So unfortunately, this is a bad wick here, it's a bad tick, and we didn't really dip down that low, so just that'll get cleaned up overnight. Just mind that long tick, because it's, then S&P probably looks more, the daily candle, I should say, looks more like what the Qs did today. They barely ventured down here into gap land. But what I discussed yesterday in Jamie's session is let's back out here and look at what the year has given us. There's a 1 year snapshot of the market. Our low end held pretty good here a couple of times. We had a lot of volatility at the beginning of the year, and we had new highs posted. And then we had this midpoint here, which definitely corresponded to these levels over here. That's why I've drawn that midpoint line. Well, everything is now changing as we move forward and zoom in. We're moving out of this neighborhood. I think we can get rid of these lines down here and move this one up to, I think, the little base camp that we built here the last couple of days. If this market wants to continue to stay in a bull fashion, which it is, and if you're somebody who's, doesn't pay attention to the prices and the footprints in the sand here, what we're talking about and what they look like, you got to ask yourself, why are you, in other words, let me back up. If you're somebody who's short this market and you're waiting for the market and the prices to collapse, you might be in for some rough times. The price action here is not suggesting that. You're basically waiting for a black swan that comes out of left field, like, a nuclear sub launch or something that nobody saw coming. It's just not, the odds are not in your favor. Let's put it that way. Looking at these price action here, the odds are not in your favor if you're someone out there that's sitting and waiting for the market to roll over because you're heavily short. The market does not look like it wants to roll over. It looks like it just wants to go higher. We're just not quite sure how. But back to the point being, this higher low that was built last week as we peaked our head above, very interesting all-time highs right there, and then a immediate pullback. And as I mentioned yesterday, a great example of how this silly market is a definite 3 steps forward, 2 steps back, type of action. You can't wait for the coast to feel clear where you use this day right here to finally buy, and we forgot that we've had 3 or 4 days, of energy expended just to get to this point. So it's normal. Honestly, it's normal behavior, price action, for it to pull back and dig in. And the fact that it dug in at that particular level is not really surprising. We had a perfect gap fill, from back there. We had some congestion back here, some support, some resistance. So this little area now I'm going to draw as our most current level of interest, below the current price action, which is all-time highs, acted as a false breakout, pulled back. This level has now been set in stone, and now we've pushed higher. We've closed. The most important thing is we've closed 2 days above this orange line, which again was prior highs, all-time highs back here. So there's really no bear case to be made at all in the building whatsoever. And the longer this price action continues to stay up here above this orange line, these moving averages are going to start to fall into place. As a matter of fact, we've now got the 10 above the 20 and the 20 above the 50, and these will continue. So we're going to want to key off of this 10-period moving average as the price comes down. It might touch it intraday. We'll talk a little bit about that later in the webinar too, and some tactics using Brokerage Plus as an example. But this 10-day moving average is really what I'm going to be keying on moving forward, and we're just going to look for trending stocks that are maybe pulling back to that 10-day moving average and maybe spiking and closing back on highs with a nice tail at the end of the day when the bell rings. You go, oh, that's a nice trending stock, and look at that, it pulled back a couple days and tested that moving average and might be ready for another push higher. So that's what's going on. There's tons of good bull flagging setups, setups from the A table that we have we're going to look at a little later. But there's no bear case to be made, and if you're waiting for the black swan to take this market down, the odds are not in your favor. That's for sure. Look at the Nasdaq, which has more tech involved in it. Curiously, it's not at all-time highs like the S&P was. It kind of got ahead of itself back here. So we'll go ahead and draw that line again, and this is going to be an interesting target that the that the Nasdaq is probably going to come up on here pretty soon. But remember, Nasdaq is doing back here what the S&Ps are now doing already. So keys are just kind of playing catch up again. The IWM is curious because it had a really nice push. I think this was a day back here where a lot of fund managers realized that there might be some value in the small cap Russell 2000, which is what this IWM mimics. And a really nice explosive couple of green day, and then actually 3 beautiful days in a row if you consider yesterday's giant gap up. And please, when you guys get 3 days, if you were somebody who was buying down here and positioning off of this higher low, well done. You're seeing the market and then participated. You got to take these 3 days and get out. Remember, it's 3 steps forward, 2 steps back. But I wouldn't be surprised to see tomorrow maybe a little narrow range day as the IWM maybe settles back into this area. And then maybe by Wednesday, it's a holiday this week, so it might throw things off. But in the near future, look for maybe 1 more day of consolidation, be 3 perfect days of pullback, and then there might be some catch-up being played in terms of value being scoured for by the big fund managers looking to put money to work to the long side, meaning if the S&P 500 is going to move higher and the Nasdaq is going to keep moving higher, and the IWM has been as zooming out here. I mean, look at this all-time high. This is how far away we are from all-time high. So there is a lot of possible meat on the bone for value players that might think that these Russell 2000 small caps are going to catch up to what the Nasdaq and the S&P are doing. I think this is a really big concept people have to keep an eye on, because if you're a big fund manager, you're not easy to get in and get out of things. You're always looking for an early edge and an early advantage. And I think some of the guys that maybe put some money to work down here, or girls, definitely got a nice payoff. And to finish my thought, if you have a nice 3-day move like that and you're a short-term oriented player, not a long-term investor, you got to take this gap up every time. Boom, boom, 2 green candles and a giant gap up. You're silly if you don't take some off the table, at least half, because it's almost a given. It's a 3-step forward, 2-step back type of market. And then lastly, then the Dow doesn't look bad at all. The Dow's been looking technically savvy for a while, and there's a great example again of that 10-period moving average coming into play. Those are our levels of interest on the daily chart. So Dow is looking super strong and very close also to its respective all-time highs. Let's see, here we go. All right, anything you want to add, Andy? I'll just add we're going to come back to this. The gold miners are extremely strong, but that's a sector-based comment. Anything you want to add to the general stuff?
Yeah, what I'd like to see is, of course, that candle's all skewed today,
Yeah.
and that's an industry-wide thing. It was just some bad ticks in the market, but if you put it back on the spies there, I noticed, it's like yesterday, we sold off all day long, very ugly tape, and in the closing minutes, we rallied to put in that tail. Today, kind of the same thing. We rallied, we kind of rallied the day on the close. I'd like to see a little more enthusiasm. I know, stepping back and looking at the chart, everything looks fine, but it feels like a lot of reservations in the market as far as, it's not what you kind of want to see, the price action as you're, attempting to break out of all-time highs. But that doesn't mean we can't just keep going, by no means. But be careful, because I'm also, if you want to pull up deck, I'm still seeing a lot of action like this when stocks do go to, all-time highs. You're not getting any follow through, and that's typically not what you see in a breakout market. Yeah. And I see that all the time. And there's no, what Steve's right. There's no real bearish case to make, but it's hard to get enthusiastic about, a breakout to all-time highs when I'm seeing the stuff that I'm seeing. But
I want to add one more thing.
Could be just the summer, go ahead.
One more thing I did have, and this is strange, and you're going to agree with me that this is kind of strange. It's like a 3-card Monty. Which is the magic asset class? Is it treasuries? Can't stop those. Is it gold? Is it gold? Can't stop gold. Or is it stocks and equities? So this is really unusual at the moment to see a power move in all 3 asset classes. Don't you agree?
I totally agree. And we saw this probably 7-8 years ago when we were in a Goldilocks market again, basically where the Fed's got our back. They pretty much said so. And that usually takes up all asset classes because it devalues. And never mind, I'm not going to go into any reasons why, but we did see it. We did see this, back in 2011, 12. But anyway, but yes, it is strange, Steve. Historically, that's not been the case if you go back to the history of the market. But strange times we live in.
That's
Zero
right.
negative interest rates will cause some asset overvaluation, but however, anyway, big bubbles is what I'm afraid of. But
tiny bubbles or big bubbles?
Yeah, tiny bubble. All right, well, let me grab it, and yeah, I got something pretty cool today because Steve, right. I just noticed this for the first time. I don't know how long it's been out, but let me show my screen here. And I'll rely on some of our regulars in here, Wally, David, Friend, Mike, any of those people in here. In the drop-down menu, I don't know, Steve, has this been around a while? Profitable trades? Because I just saw it today for the first time. No. Of course, I did download the new release. You don't have it then, Wally. You don't have profitable trades yet.
I don't have it either. Okay. I have not downloaded the new version.
Okay. Well, guys, a little teaser. This is going to be very nice. Okay, so we have profitable trades in there. Remember how many times I've told you guys on these great trades how we call them no pain trades? This Amron, beautiful no pain trade today. And by the way, I am looking at all trades today. There wasn't a whole lot of made in each holly, so I'm gonna just put them all together into one window here. And I've shown over and over in here before how a lot of times you get these no pain trades. Let me see if I can find another one here. IYR, man, we traded a REIT ETF today. Interesting, but once again, still a no pain trade. Well, guys, what you're going to be doing in the future, because a lot of these trades, they just don't work very good, from the get-go. They're pretty sloppy. They go underwater real quickly, and they continue that way. And so this WTR is a great example. You top wicket right there. if you had it on only profitable trades, okay, this is only going to calculate in risk off mode. So it's not going to try to follow risk on mode. It's going to, you know, once the time exit, reduce risk, whatever, for whatever reason it gets out, it's only going to show those trades that are, you know, profitable in risk off mode. So when it does go against you eventually, it's still going to show up on your unprofitable trades, because once again, it's for whatever reason Holly exited. But this is going to be a nice little feature for those of you who like to follow Holly, but you're getting too many trades, you don't know what to look at. Man, now you can only just put it on the ones that are profitable. So, and trust me, if the exit is not made and one turns back and goes profitable, it'll appear on here in real time. So this is going to be a nice little tool, guys, because you are going to be able, once again, to only see, you know, the stocks that are profitable, doing well. Not sure what happened there. That's pretty sloppy. That was a small winner. So not a lot of trades today, but if you can take something like this little drop down box and just make a little check mark and be able to focus on only the stocks that are green. I mean, even Ameren, if you didn't catch it from the get-go, you had a nice little pullback here. We talked about the strength, huge volume. We talked about the strength of the 10-period moving average. So if you're only watching a few stocks, and this was early, so you'd probably only have one or two on your blotter, you'd be able to catch something like this possibly on a pullback. Push, 3 bars pullback, bar reversal would have been a great entry in this one right here. Cura's short, that was pretty sloppy. Obviously she got out at the right time down here, but still some nice little you know, alpha there, and you could have been gotten out at a better trade. IYR, once again, it's kind of a REIT, but once again, you know, no pain. And once again, if you're watching this, it stayed. You would have saw the pullback even if you're just looking at your blotter, and you could have gauged a little bit and had a little not too much of a move there, but probably not a great example because we had such few trades today. But I guarantee you, when we have, you know, these Hollies, and you have the ability to put on all segments so you can see all of them in one window. You no longer have to keep your eye on the flashing box over here to see when a trade was entered. You just have everything in one window here, and then you separate them by only watching the profitable trades. I think, guys, for those who like to follow Holly, this is going to be a game changer. I really do. So yeah, keep an eye on that. As far as that goes, there's not a lot to talk about. It was kind of a sloppy sideways market today. Ameren, boy, it was just a beautiful trade. If you caught that this morning in the first, right after the first hour, boy, that was just a beautiful horseshoe. These are the kind of trades you look for, you know. Even though it wasn't at a 52-week high, it was still breaking above this range right here. And that's right when Holly called it on a pullback there. And look at that beautiful trade afterwards. So see if that's any questions. Yeah, Dan, okay, so Dan may have talked about that. Good. In the last podcast. Good. Well, you're going to have it soon. Hopefully in the next couple of weeks, I would think. But since we got it last night. But Steve, that's about all I got. Not a lot of trades today. Holly did finish up, you know, on all 3 Hollies. Not much, but
I'm sure you pointed out the new feature there, right, on the 1 share versus 100 share display on our thumbnail Hollies.
Yes, I'm sure Dan probably talked about this, but I will. What you're seeing now, guys, what we changed it because we were just calculating as 1 share, and people had a lot of problem with it, and honestly, I did too at first. It's kind of hard to gauge. So what we've done is change it to what normally somebody might trade. Not very many people trade 1 share, so we put it in 100 shares. Okay, so now when you look over there and you see Holly had 3 trades in 2.0 and she's up $68. That means if you put 100 shares, if you bought 100 shares of each stock. Okay, and of course this is full risk here in Holly 3.0, but the rest of them were risk off. But yeah, I like that idea. It makes it easier. And of course you can always put whatever. I got 200, I think, stop loss to risk $200 on mine, so you can always put whatever you want inside the if you go to tools,
Tinkerbell
options, yeah, trade size, you can always put 200 risk based on stop loss, and that's what I have. But Steve, yeah, that's about out. I will shoot it back over to you.
Alrighty then.
Oh, I don't have it. Oh, you already grabbed it.
Okay. I got it. Yeah, too fast for you.
Mm-hmm.
All right, so oops, kale. Let's try that. So again, going into the weekend, looking at the scans, what was coming across the most frequent, good setups in the mining industry and the mining stocks. And I actually kind of like PAAS because a couple of reasons. We already had Newmont as a great call, and technically it's still open, and we'll come back to that. But silver, starting to get a nod now. Silver's starting to catch a bid as a secondary coattail rider of gold, and so PAAS going into the weekend. Perfect. There we go. This is what we looked at on Friday. I love the way this looked at. There's our gap up 3 days and pullback, gives some back. Kind of a shallow pullback, a beautiful little candle there on the close with the rising moving average. This looked really interesting, but then Andy did a great job in pointing out there's a stock out there called KL, which is not only a mining stock, but it's got a freaking 98% stock composite rating. Pretty important. So it means without even having to look at the details, we know that it's an A table type stock. It's got enough fundamental strength and enough technical strength to be in the A class. And without a doubt, this is a very strong looking chart. Well, going back, there we go, taking back to Friday, this is what KL looked like, very much in the flag camp. So two really strong setups, and if those who did read the actual email, pause became an also ran. Kirkland Lake was our trade of the week, but bonus idea down here, silver being dragged higher in bullish move, consider trading pause as well. So fast forward a day to yesterday, we had a horrible gap up, had a horrible gap down in mining precious metals, stocking silver and gold, because the S&P gapped up so incredibly much over the weekend. So that took a lot of wind out of the sails of gold and silver. And so this is what KL looked like yesterday at the close. Not too bad, kind of came back. It did close under the moving average that I hate, but did it nonetheless, and then fought back with some vengeance today and actually did trigger. Our trade of the week triggered along with a lot of other gold stocks that just caught a bid towards the end of the day. And in addition to anybody who was watching PAAS, it did exactly what we hoped it would do as a secondary call. So this is also still in play as a possible silver call. So, make it for what you want as that second bonus call in PAAS. But, the technical KL is our trade of the week. And if it gets back above this red candle up here, we're talking all-time highs above that blue shaded area. And there is technically no resistance at that point. If we go back on a weekly chart and start scrolling back, we see this is an all-time high. It's a beautiful trending stock. I wish all stocks looked that good that we were long. So that's the trade of the week. We couldn't ignore another gold call. That's why I thought maybe silver would be not really a duplicate double up on gold, but possible catch-up play. But both charts looked really good on Friday. They both got a little scrambled yesterday because of the huge gap up in stocks, and there was a big gap down in gold, but they all seem to have found their legs and caught right back up and got right back into the game today. That's what you want to see in a strong stock or a strong chart. It's like a balloon. You push the balloon underwater, you let it go, it pushes right back up. It gives you the complete intention of it all along. You start to see bottoming tails and shallow pullbacks. So that's the trade of the week. On this one again, now that it's triggered, we don't want to see this very tight moving average. 10-period moving average is up here in around 42.30 maybe tomorrow. So a very tight risk reward level. We just don't want to see it close below. So thankfully it didn't trigger this day and then close below and fake us out. It waited till today to fake us out and then trigger. So we'll see what happens in that one. Unless Andy wants to add anything, I'm happy to move on to the next segment.
No, I like everything about that setup. And now, obviously,
found it.
obviously, we're at the mercy of gold, no doubt there. So, but that looks good too. So, Yeah.
Yeah, this really
Oh
does.
man. So
This could be a breakaway gap in gold, the commodity itself, in hindsight there. An attempt yesterday to come back and get it, but we didn't quite get into the range. All right. So before we move on to setting some alerts, which is usually where we end the program, we've got some time. And hopefully some of you did click into that chat window, which shows you what our current web page looks like on the standard subscription versus the premium subscription and the one-time licensing fee to connect to the AI completely. But you know, in a nutshell, the premium version allows you to do automatic trading if you have a scan that you find that works that's interesting, and I'll talk about this one in a second. You know, you can auto trade it if you like. But what a lot of people are using it for, we're not talking enough about it, is just using it as a simple skin, is what they used to call it, or a shell program that overlays the brokerage. In this case, the brokerage is Interactive Brokers. And if any of you have worked with Traders Workstation, you've probably seen how cumbersome and non really quite user friendly it is. It's not really a slick user interface. So the guys here, especially Dave and some help from Michael and Brad, they've come up with a really cool way to trade stocks if, capital if, you have an account at Interactive Brokerage. So if you are now a standard subscriber, if you were not aware of it, and you also have a account at Interactive Brokers, you can use this extremely easily, and it's included now. That's why I asked you to click on that link. It's now included to just use as just for discretionary trading, we'll call it. It's not auto trading, it's discretionary. And you might say, well, why is that important? Well, I'm going to show you. It's pretty cool. I mean, you know, we don't talk much about it, but you know, Andy and I and Michael, we're all kind of hooked into this little test account where we limit ourselves to maybe 2 or 3 trades a day, and they're going to be day trades. But the point is you know, to try and identify some interesting day trading strategies that work, and additionally, you know, test and kick the brokerage plus module around and learn it. And for the most part, it's definitely sold me, you know, on that option. So what I want to show you here is something so simple. I mean, the way Trade Ideas is set up now, you know, if I was into a stock here, I'll just type in Tesla for lack of a better word. Actually, bad when it's gapping up after hours. I'll just use the SPY. And if I want to come in for whatever reason trade SPYs, I can trade directly through the Trade Ideas platform using this Brokerage Plus as the interim vehicle to send the order. And why that's important is because we can send the order with a lot of information at once. We can send the order along with our stop order, and we can send the order with a one-click execution, already recognizing our downside risk, which I'll show you how to configure in a second. Therefore, ultimately calculating the share size of the trade, all done immediately. And so it saves a lot of time, and it becomes a very efficient way to enter and exit trades and manage trades. So let's say you want to, I'm going to use, there's a good example today in this one. It was, we'll come back to the scan, but I'm going to use this one as an example, Grub. See the arrow here on Grub? This scan is looking for stocks that come down on the daily chart and then pierce this moving average more or less in the area, and try and possibly set. Mostly they're going to be in an uptrend. Andy has created the scan, by the way. It's called I'll Take That, Thank You. But a lot of times we might see something like this. In the first half hour, we get that crazy drive down that drives people nuts. Well, this scan is designed to kind of play off of that, and Brokerage Plus works perfectly for an execution platform to do something on the fly with this type of a scan. So it's looking for, again, here's the daily chart. We push down through. We get an alert down here, and as it were, that's why I'm pulling this example up. This was a good example today. An alert very close to the bottom. The idea being we're looking for these opening range flushes that run a lot of traders out and then set a low for the day. That's the key word here, low for the day, and then they just gravitate higher. Well, this is the kind of setup I'd be looking for using this scan all day long. Now, we use this scan in our real-time testing. I actually traded one, I'll show you in a minute. It was the wrong one. I wish it would have been Grub, but it was another one called Hess. But what I want to show you is how can we create an on-the-fly scan where we can come in here and go, trade Grub, boom, boom, click, and we're in. And more importantly, on this particular scan, the idea is this alert has come through and set the low of the day. So we watch it, it hits that level, starts to bounce back up, and maybe right about here, you're looking to create or create an entry and send an order. But we can do it where we've already hashed out the details, and this is what I'm going to show you now. All right, so we want to trade grub using the low of the day as our out. So this is not connected, but we can still demonstrate here. On the strategies tab, these are all the current strategies, and you'll see buy $5,000 at the market, buy 5,000 at the last price. These are all relative to what I have up here. When I go trade grub, there they are, buy, they're grayed out. But these are one-click strategies to execute these guys right here in this window panel. So let's add a new one, right-click, new strategy, and we're going to call it sell at low of day. All right, that's going to be our title. We're going to see that name. We're going to know that's what we're going to do, but now we have to configure it the way we want. A couple of the main points here is our position sizing is going to be first based on a stop loss. We want that to be definitely the way in which we're configuring this. So it's calculating the shares. Hang on one second. Oops. There we go. All right, it's calculating shares at stop loss based on stop loss position sizing. This is very important right here. Risk value, how much do we want to risk? And this is where the calculation comes in. Let's say we don't want to risk more than $50. So this is where the system is going to look at the low of the day, which we haven't set yet, the current price, our entry price, and the distance between that and the low of the day cannot equal more of a loss than $50 should the price roll back over and make a new low on the day. So here's the first piece of the puzzle. We're going to base our position sizing based on the stop loss, which is going to be low of the day, but we don't want to lose more than 50. All right. The order entry is always really important to use a negative value and something a bit aggressive. So use like maybe 6 cents, meaning we'll be happy to buy above the current offered price by 6 cents, maybe 8 cents if you want to. But it's important to have that to make sure you get a real world execution fill. And then here is the magic formula right here. I actually had to go look it up, Andy, on the other screen to see how Michael did it. For stop loss, we're going to use what we call the filter version. Okay, the filter, and the filter that Michael is using here is real simple. He's using the above low expressed in dollars and sign. There it is, above low expressed in dollars, and then his qualifier right here is going to equal 0. All right, meaning 0 cents above the low. So let's rehash here. We're creating a one-click order called buy with stop low of day. Get rid of that rest. Okay, buy with stop at low of the day. That's what we're going to see when we one-click order this thing. The position sizing is based on the stop loss. The stop loss is going to be 0 cents above the current low and not lose more than 50. So we'll click OK, and there it is, buy with stop at low of the day. This is the kind of method we're using in real time in that other test account with these types of alerts. Let's go to the one that actually traded this morning. If we can find it here, it was Hess. There it is. All right, so here's what happened. There was our low of the day in Hess. I really liked Hess. It was very similar to what Grub did, by the way, meaning when I looked at the daily chart, it was in a nice uptrend. It was above its moving averages, and it was going sideways. It wasn't ahead of itself. It wasn't just a one-day pullback. I liked the consolidation, and it came down here and just kissed that moving average just below these levels back here, the typical kind of an algo bot thing to do. And so I jumped in right there at the level of the arrow, set the stop at the low of the day. Stock started to bounce up, thought we had a winner. And then as it rolled back over, realized that this isn't going to work. Ideally, these should just test once and then bounce. If they're going to roll over and do a second test, we want out. So we closed that one for a small loss. But nonetheless, that was the idea. And what Grub actually did on the day was what we were looking for there in, there we go. In that one, see, consolidation back and forth sideways, came down to the low end of this range. This is what these damn bots do. They just come tickle the low end of the ranges and see what's underneath there and then reverse the other direction. So you don't want to be the person that's going short down here at these levels. This particular alert, and we'll talk about that in a minute, is scanning for things that are opening up and slamming down with morning extremes that we might be able to use a simple one-click entry, trade grub, buy using stop below a day. There it is. That's how quickly I could have done it. The trade would have come in. You would see a blue line down here saying that's my stop of the day because there's the low. We'd see another line for our entry. All right, and then maybe the price starts working. All right, and as the price starts working, we can come in. Here's another beautiful part. You know, we don't have to come in here and go to our positions and right click and do all this stuff, you know, change 100 shares. Yeah, you can do it if you want to sell half or be specific, but it's just so easy to come in here and take your stop, pretend this orange line is my stop, and just move it up. Keep moving it up. You've got an order to sell up here. It'll show order to sell, and the price comes up to it, and it's not getting close, and you're getting impatient. And you're like, you know what? Just drop the price another 20 cents and get me out. And as you move the lines on the chart, your actual orders are canceling and resetting and updating and adjusting. It's so easy. It's so user-friendly compared to what's underneath it. The you know, the workstation, IB workstation. So that's the whole point here, is that this can be a really neat way to manage your positions, get in, get out, especially if you see something, as Andy was talking about earlier, maybe you're looking at the open positions of only the winning trades and you see something you like and all of a sudden you want to grab it, right click, trade it, you know, trade ST. You can do it. It's a very simple process. So the whole point is, if you were not aware that you have a standard version, we have now inserted the functionality for people to enjoy and use this brokerage plus skin over your standard version subscription. Now, if you want to take it a step further and start auto trading these, now I don't auto trade these, and neither does Andy. We don't auto trade at all. We're discretionary traders. But today we had a lot of returns in here. Typically, we might only have like this many, you know, maybe 8 or 10 to choose from for the day, not 20 or 30. But you're going to get a full version of these I'll take that scans on pullback days, and that's kind of what we've had. We've had kind of a consolidation / pullback day the last couple of days in the market. So there's been a lot of stuff coming through here, and not all of them have worked. A lot of them haven't worked. But on days when the market's maybe trending up, and one of these sneaks through, you've all seen it, guys. You're all long this stock, and you want to know why the hell the market maker's driving this thing down 2% on the open, and then you come over here and you look on the daily chart and you go, oh wow, look at that. It tagged that 10-day moving average that Steve always talks about. Well, that was interesting. Well, this one didn't do it till the end of the day, but it did it. And you can see it kissed it and bounced right off of it. So interesting setups to use for this. I wouldn't trust it auto trading. You might get a lot. How do you connect to IB, says Gerald? Well, we have some literature we can hand out to show you how to grab some of the settings on IB's end, some of the port settings, and then you just basically come in here and you connect to Interactive Brokers and follow the instructions that we give you. And it's that simple. So if you already have an account at IB and you already have a standard version Trade Ideas account, you know, come in, send us an email, and we'll send you the it depends on what the client ID is, Gerald. Send us an email and we can send you the documentation on how to send that out. I'm not really sure what that one's going to be. All right, so that's enough with the.
And also, I'll drop a link.
Sure.
Yeah.
Yeah. Go for it.
Well, if it's let, it won't let me.
In the chat window.
Let me see. There it goes.
Yeah, there you go.
Yep. There you go.
All right, so just to rehash, standard subscription, you can trade whatever you want. Like you see something, you like it, you right click, or you one click it, you got it, you're in it. That's how easy it is. If you want to automate something, and again, I wouldn't automate this, but some people do like to automate trading. Every time this spits out with the same price stamp and time stamp, you're not even having to one click and decide if you want it. The system is going to send you an order based on any of these method criterias. That is part of the premium subscription, auto trading. What's the standalone product as the one-time licensing fee for the is to trade the AI, meaning, I'll bring that back up, you can hook up to Holly the AI and trade that. It's essentially this tab right here becomes enabled, Holly the AI. You can enable the longs, the shorts, whatever you want. There's a little bit of control in there. But that's basically the 3 different levels of allowing allowing Brokerage Plus into the subscription levels now. All right, moving on. Last segment here. Remember, I know all you guys were in the Thursday group. Let's take a look at the price alerts from Thursday. Again, these were ideas that were set based on the same type of market we had last week. using the same type of scans and ideas and the same type of setups that I've got for you today. But let's just do a quick run here. Really nice chart. Look at that sideways action, and the moving average forces it higher, and beautiful push on that run. Huh?
When you said a quick run, did you know you were about to pull up run?
No, I didn't. You got me on a synchronicity there, Andy.
Yeah.
So run 8% roughly. Really nice setup. I mean, I just love those. Let's see. Run had a 90 stock composite. So this was off the A table. I remember this one, talking about this one, AJRD. I said I really liked this one. Why? Because it was doing the same damn thing. Sideways action, but more importantly, this guy had 27% short the float. And I said if it went, it might really go and not look back. And then 3 solid days of gap and go on that one. STMP. Kind of coming up, a different one coming up from the downtrending. I don't have any of these this week. I don't trust them as much because they're just not working as much as the other ones, but still nonetheless that one did trigger and create some alpha. IPHI, it did trigger, and so if somebody was in it and did take it home, you were participated in the gap the next day. And remember, when you get a big giant gap the next day, it's always good to take some off, because if you look back here where it opened 2 days ago, it's still below that opening area, so it never hurts to take some off the table when you get that nice surprise gap. MAN, 1 day through, day and a half, it's reversing, probably going to come back and settle into the breakout point, maybe move higher. Here's our trade of the week on there only because it triggered KL. It didn't give that out last Thursday, but it was there. And then again, another one of the downtrending stocks. They just can't get out of their own way right now. They don't have the follow through that these other ones seem to have. So we don't have any of these trend change type of go fishing stocks this week. We're going to try and stick with what's working. And then just nibbling above the trigger, not doing much, trigger pull back. These are the bottom of the barrel, the ones that did trigger pull back. But when you look at the triggered column here, there's 8, 14, 20, 25% to the upside, minus 4% to the downside. So pretty good winner to loser ratio on last week's. So let's go ahead and clear these out, and we'll finish up talking about the ones that I have selected today. Got 7 of them. 4 of them are from the A table, 2 of them are from Andy's daily bull flag, and 1 is discretionary from me. So the first one is going to be from the A table. The 4 of them is pod. Open the pod doors, Hal. Short float is only 8%, not bad, but it's getting closer. We're just going to mark up these all-time highs here. I'll do this one. 22.20. All right, there's that one. There is going to be, this one is actually in the chapter, the book, ENPH. Got ahead of itself, broke down, and it's back above its moving averages. And I think it might go sideways for a day. And if it takes out this high yesterday, it's going to assault all-time highs again. This thing has been a juggernaut. You can't even stop it. So we'll look at this high here, 1888. We'll go to 89. I don't think we're really in earnings season, so we shouldn't have to worry about too many of these. All right, AYX is the next one off the A table. Another little popular guy over there. Another little popular, another little pullback, another little shallow pullback. Let's use these highs back here. 111.90. All right, and the last one from the A table is SMG. Shallow pullback, moving sideways now. Just looking for a reason or a catalyst to take these out. 99.48 is our number. All right, that's it for the A tables. Those are all high scoring, good looking stocks. That one's a 94 score right there. The next one is going to come from the bull flag that Andy created called AZN. It is a pharmaceutical. I'm going to have to put that in the notes just to remind people, but I really like the way it's trading here. I'm going to do a follow through today's highs actually. 41.77. Remind me to biotech. Biotech, pharma. Caution holding overnight. You never know with those suckers. The last one on that bull flag is V for Visa. Jeez, look at that. This thing just keeps going higher, making higher lows all along the way. Looks like yesterday was the number. So if it takes out yesterday's gap up high, 175.55, we will be interested. And then the last one, as promised, is a discretionary one by myself. We have to go back to the well. Look at how the Newmont is setting up here. I know it was the trade of the week back here, but it's giving us another really nice setup. Don't you agree, Andy?
Totally. Yes.
I think we will put it.
Pretty.
What is that? 38.48 tonight. We'll put it above today's high. 38.54. Nailed it.
Well, head start.
I'm going to do a head start. It's kind of a flag. Not going to wait for it. I mean, it's only going to be about a 20-cent head start, if that. But that one's discretionary, and that one's in there. 1, 2, 3, 4, 5, 6, 7. Careful to share and not delete. Share the 7 selected price alerts with everybody that wants them. Drop that into the chat window now. Price alerts. I'm not yelling. I just forgot to take my caps off. And I believe it came through. There we go. All right, so the cloud is in there for anybody that wants to set these price alerts using the cloud. You can do so. They'll trigger at the same time. Hopefully this batch will work as well as the one that worked last week, the batch. As always, keep an eye on the general market. If we have a giant candle that turns around and, you know, we have black cloud, black swan type event and the market's nothing but red selling all day long, then obviously these ideas might not be in the best interest if that's the backdrop of the market. So those ideas are, of course, assuming that we continue to kind of just trend higher with the bull case intact and no real bear case to be made. All right, so that's pretty much all we've got today. We'll go, I should start charging, I know, Waleed, but we don't charge. We're happy to share. We'll bring in Scott now and some final announcements, and we can start pointing towards the holiday.
Yeah, thanks. A couple items on the way out. We do have a podcast. It's a holiday weekend, so tune in next week for the new one. But you can find our podcast by searching for Trade Ideas Podcast wherever you listen to your podcasts. Add us as a subscription to be ready to pick up the next one, or you can download some back issues. We've got some nice interviews there with guests you can check out. We have a new ebook. Actually, it's 3 of them. Each one has 2 chapters. They're arranged by topics. Both Andy and Steve contributed some chapters, so do check it out. trade-ideas.com/setup. Plug in your email there, and you get the download link to all of them. So get those on your desktop or your tablet or your phone and enjoy. It's got good stuff for you. New code this month, July highs, 15% off your first month or year of any Trade Ideas subscription, Brokerage Plus, or upgrading from standard to premium. So if you're on standard and you want to do the upgrade, use that code too. You can follow Steve on Twitter at TodayTrader. Also follow at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook page to follow and share stuff with your friends. Any questions, shoot it to info@trade-ideas.com. That's the best place to send your questions because it goes into our help desk software and goes to the right team member to help you out. Thanks, everyone. Thanks, Steve. Thanks, Andy. Have a safe and happy 4th.
See you next time.
Happy 4th, everybody.